Kristen, let's talk about where we are with the dollar. It seems to me the positioning in the dollar feels very one way at the moment. Can you give me the setup as we enter this Fed decision?
Absolutely, and thank you for the question. There is no question that the majority of our clients right now have a long dollar bias heading into this meeting. It's a combination of the more hawkish shift that we've seen from the Fed over the past couple weeks, in addition to the safe haven benefits that the dollar has benefited from over the Omicron-induced uncertainty. That being said, again, when we think about where the dollar can go from here, there actually is limited upside. The Fed is fairly priced, and on most valuation metrics, the dollar is somewhere between 5 and 10% overvalued. So we're not necessarily looking for a big up move from here either.
Well, fair point. And I wonder if we're going to see kind of buy the rumor, sell the news, the same way that we're seeing a little bit of sell the news in equities and then maybe, sell a rumor and then buy the news in equities.
Yeah, listen, I think most of our investors right now, just given the ongoing uncertainty, and obviously we're entering a critical 24-hour period here with some of the key major global central banks, having really interesting decisions. I think on the margin, most of our investors right now are biased towards reducing risk into the end of the year. That being said, I still think most people want to have some long dollar exposure heading into 2022.
Kristen, could you be a little bit more nuanced in terms of what is happening here? Do you see euro-dollar reacting over the next 24 hours? Do you see dollar-yen reacting over the next 24 hours? The cable rate? Where do you think the biggest potential is for movement?
Absolutely. And I think, look, the market is really focused on monetary policy divergence right now, and you're really going to see that crystallize in the next 24 hours. Again, our view today is for a more hawkish shift from the Fed. Again, we have updated our call in the past few weeks, looking for an announcement of a faster taper today, with the first hike coming in March. You are going to see, a pretty opposite reaction from the ECB. We think that the ECB has little upside for painting themselves into a corner tomorrow with respect to a more hawkish message. You've also had ECB sources out over the past 24 hours suggesting that the updated projections tomorrow are going to show inflation below the 2% target in 2024. That's going to give Lagarde plenty of room to push back on rate expectations that are already starting to get priced into the end of next year. So when you really look at that policy divergence, it's really hard to argue seeing any sort of euro outperformance. Again, you may have a little bit of a relief rally into the end of the year as people are reducing positions, but by and large, the expectations are that the euro will remain under pressure.
What kind of volatility are you prepping for?
Well, look, again, this is an interesting time of year. Obviously, there's a fair bit of uncertainty out there right now, and Omicron has certainly, injected that into markets. And, as I mentioned earlier, I think on the margin, clients are more inclined to reduce risk into the end of the year as opposed to necessarily add risk. That being said, we are looking for a more benign trading environment heading into 2022. Again, the Fed is fairly priced. Omicron, while clearly there's cause for concern right now, the early data is suggesting that while transmissibility is high, hospitalizations and death rates are low, and the COVID pill is going to be a game changer. So we do think actually heading into 2022 that you could be in an environment where risk actually starts trading a bit more consistently and a bit more solid.
Kristen, I'm trying to figure out where the surprise comes in the next 24 hours, and I have no idea anymore what the Bank of England is up to. They've pulled us one way, they've pulled us the other way. The data over the last couple of days, we've got the CPI print this morning, 5% plus. The bank wasn't expecting that until next year. The labor market is super strong. Omicron could be more inflationary than we think. Any chance that we get a surprise out of the Bank of England, and how is pound positioning looking like right now?
Well, there's always a chance, and I think the Bank of England has struggled a bit with communication as of late.
That's a nice way of putting it.
Yeah, exactly. Look, at one point, the December meeting was fully priced for a hike. A lot of that has been unwound on back of the Omicron-induced uncertainty. When you look at the data, again, inflation strong this morning. The labor market continues to show very, very strong. And again, the data yesterday, reaffirmed that. And we're going to see, the labor market helping to lead the recovery in 2022. But right now, in the UK, the focus is on politics, and obviously Boris Johnson has his fair share of controversy right now, and the Omicron-induced uncertainty. And the reality is, the committee is unable to rule out the worst-case scenario at tomorrow's meeting. Therefore, we do think they're going to be a bit cautious. We were one of the first banks to shift our rate call. We're now looking for the first hike in February, as opposed to tomorrow. There still is a little bit priced, but as long as the message tomorrow is delayed, not canceled, sterling will trade okay. Sterling sterling has been a very frustrating trade for our investors this year. They came in with a more positive, bullish bias. That hasn't played out for a variety of reasons, but the setup into 2022 is looking more positive. Again, the underinvestment theme, underweight UK assets. We expect the inbound M&A activity to be more positive. So by and large, we are looking for a better outcome for sterling in 2022.
Okay, before we wrap it all up, are we going to get a safe haven trade in the FX market in the next few months as we're kind of unwinding all of it? And is it the dollar or the yen that's going to get that?
Listen, the dollar still remains the ultimate safe haven. And, again, there remains a lot of uncertainty around, in the markets, particularly around Omicron. We're going to have to see how that develops. The bond market isn't pricing right now runaway inflation, but clearly that's investors' concern. So there still are a fair bit of things out there to square away. But again, ultimately, the dollar will remain, the go-to safe haven. And again, when you compare that to the yen, you have that clear monetary policy divergence. So, again, I would always argue that the dollar is the ultimate safe haven.
All right, Kristen, thanks a lot. Really appreciate it. Busy day. We'll let you get back to it. Kristen Macleod of Barclays. Thanks very much.